but a lot of stuff, a lot of painful stuff for a lot of people, unfortunately. And
yeah, that's exactly how I thought.
I'm just one who believes it's could have been resolved in a much different way, but that's neither here nor there now. So, as usual, you just have to pick up the pieces, and I will tell everybody right now, I basically have zero positions, so I'm out of so much of whatever. And I believe me, I didn't catch this last leg of it. It's just got a little too much for me. I always very careful during the. I may trade during the day, but very cautious here because my first sense is to try to make sense of what I'm seeing, price actions, because of course that's my day job. So regardless of how I feel about the world, I proceed along. But a lot of shit, so to speak, a lot of shit in the world that they're trying to sort out. Nobody knows. Anybody tells you that they know, you can rely on some opinions, which will be better than others, but nobody really knows. They're all trying to guess what's in Putin's head. Good luck. Good luck. It's not a game I choose to play. So, and that's so. Where do you want to go from there?
Oh, I don't know. God, my God, it's the same thing. I did a me and Shy Girl Tracy Chart did a live yesterday with Credelli with Anthony. Yeah. And I was, he asked what my positions were, and I said, I'm long gold still, but that's it. I flattened up everything, and I ended up getting short S&P a little bit yesterday afternoon, and I still have them. I don't know how long the market's gonna have to do something for me to hold them.
Yeah, well, you'll see. You'll be able to discern. I mean, where the market, some of the market action. In a very real way, just have to be very aware of what's around you, because we still have the central banks out there with a heavy footprint. Where they're going to go, don't know. Jerome Powell, again, he played the role of the social justice minister. How far does that go? Does this, keep them off here? And now are they going to look at this next rise in commodity prices resulting in some types of transitory inflation? There we go with that word again. So, I mean, I know Mohammed Al-Arian was out talking this morning and saying this is the worst kind of thing because these kind of events create stagflation because you're with all this uncertainty and certain higher prices and lack of feedstocks in the commodity. And I'm not just talking about grains, I'm talking about energy into fertilizers. I mean, there's so many things, so many moving parts here. And is the effect inflationary or, as he says, stagflationary? And now the Fed really has to be very careful, which is why letting this continue to fester and hang out there has not played well with them. So, I mean, we are now in a whole new type of analysis going on here. So, and you're seeing people are finally nervous in the equity markets, and now it has nothing to do with interest rates. It's, of course, many other things. And if Al-Arian is right, we go into a stagflationary situation. What will that mean? And how will it play out? It certainly won't be good for corporate profits. I can tell you that. And there's a lot of people sitting on so much risk. This is the true outside of what Putin's going to do, which is we're talking about lives and the blood. The blood is real, and I'm one who believe this could have been prevented had the United States ever actually said, well, what are we looking for here? Because I've not been a fan of this administration. I think that they, hold on one second. Okay. So, I mean, you are really going to have to ask some deep probing questions. Hold on one second. I got to take this call. Yes.
Okay.
Yes.
Hey, everyone, feel free to jump in, unmute and talk with Ira, okay? Feel free.
Yeah, go ahead. You should have a lot of questions. I have a lot of questions, but I've been working very diligently and trying to comprehend, how this was going to play out. So, let's look at it. I think I sent you the Ambrose Evans Pritchard piece the other day, and he was, this is a two-way street here. So when you talk about sanctions, again, to me, the U.S. suffers because when you're at the top of the heap, you have a tendency to have very static and old analysis, and the world is just not operating on that. The whole concept of mutually assured destruction, and I don't throw this out easily, but as soon as Putin starts talking about nuclear weapons in his speech, when was that, last Friday? I mean, he threw that out there, and these are very real things, because nuclear weapons, who was I talking to? Somebody the other day. I know. But, there's things, and Putin has broached that subject too. There's tactical battlefield nuclear weapons. So if he wants to inflict the greatest amount of damage in the fastest way possible, is that a possibility? Well, we have always operated, don't forget, academics are model builders. It's the problem with the Fed. Unless you're going to tell me exactly what's in your models and how you come to certain assumptions, I know models are really good for aggregating data. But to make decisions merely out of that aggregation of data, I think leads you to very flawed policies. Now, in international relations, foreign policy, they use models too. And the models really start with the same premise. It's a rational actor model. The whole basis of mutually assured destruction, which was the whole framework of the Cold War period. Well, nobody's going to use nuclear weapons. You'd have to be and that's why they called it MAD. It was a nice acronym, mutually assured destruction, because then the purpose of defense became you wanted to be assured that you had second strike capability, because if somebody was mad enough to strike first, they had to be assured that they would be destroyed because you had the ability to respond in a very aggressive action, which is why we have what's called triad. So you had Strategic Air Command, which was bombers that were at one time always up in the air, and then they could deliver their payloads. You, of course, had land-based ICBM missiles, and then you had the third part of the triad was submarine launched nuclear weapons, and that you'd have to be out of your friggin' mind, because you could be assured that, yeah, you might start a war, but to what advantage? And therefore, we're going to destroy you back. So, yeah, you may lose 50 million, 80 million, 90 million people, but be assured that our response will be just as devastating. So, for what purpose?
Hmm.
So it assumes rational actors. Don't diminish it. It's what it's based on. So the question you have to ask yourself, is Vladimir Putin a rational actor?
I don't even know how to answer that.
No,
Or
me
I don't even
neither.
know how to think about it. I don't even know how to think about that.
Me neither. But I only throw that out there because this is now how you have to proceed. Yes, you can proceed with your charts, and of course, that's the way we operate here. But know it. know full well that if you can't really predict certain types of actions, or at least create probabilities for certain, you are in a whole different world. So what I'm just giving you is a massive overlay of warning. Now, I'm always cautious. I am a risk-based trader. I need to know my risks beforehand.
Yeah.
That's the only reason I bring it up. Because I want everybody to understand the lay of the land.
Hey, Ira, this is Ed. I'm wondering where you think China fits in.
Yeah.
I feel like they are maybe a little more measured or maybe a little more rational than Putin, and maybe they don't want a major international war. It seems like it'd be a bad thing for everyone. Russia and China have been kind of chummy of late. Maybe there'll be a check on his more aggressive actions.
Ed, it's a very, very good question. And again, we're hoping that that's the case, right? Now, I would parry back at you going, well, do you think Putin undertook this without telling Xi exactly what he was going to do?
No, I think they probably are in cahoots on that.
Yeah, I would too. And I had so you asked to me, it's a very great question, because I had a long discussion with a very good friend of mine, Kevin McCarthy, who I discussed these things with because we were in graduate school together. And I brought him into the trading world when he finally left. But he's one of the most intelligent people that I know in this area, maybe very intelligent. So we discuss a lot of things. I usually pique his interest with the blog, but that's not what sent him. I sent him the Ambrose Evans Pritchard piece, and he came back with the same comment you did. He says, yeah, I don't think China at this point, at this juncture, is willing to upset the entire global economic system. It's just not in their interest. And so I think that's right. So it gets back, then if we look at it rationally, what is it that Vladdy wants, right? I can't get away from this, because this is the way that we're going to have to see some resolution of this. But I think he wants what he's always wanted. And I've said it many times, I've written about it, is that, look, he wants a codified treaty that says that NATO will not look to continue to force its way east. Huh. You can put it in any words that you want. He was pretty sure he had that with the Minsk Accord that Europe rushed, the Germans and French rushed to get out in 14, 15, and 16 after Crimea, because Europe was saddled with such huge problems. They just did not want Eastern Europe exploding. So they were willing basically to give Putin whatever he desired. Of course, they were never implemented. The United States was never a signatory to it. They've just existed out there. But I think from day one, he was very honest in laying it out that, hey, okay, you want to appeal to international law? I need a treaty, because that's the only aspect that holds up in international law anyway. So I want something that says that you will not. And I think he's been very forthright about that. And the more that he wanted that and threatened, the more they, raised the level of sanctions. Because, 6 weeks ago, and there's nothing partisan in what I'm going to say. I just don't look, I don't look at the world like that. Because if you look at the world, and everything's a partisan answer, you're missing a lot that's out there. And you wind up with a very jaundiced and flawed analysis. So there's nothing partisan. I may not like the strategists that surround Biden. I didn't like them when they were in the Obama group. I thought that they were responsible for a lot of missteps in foreign policy, if I can use that word. But I will use that word because I think that's absolutely the right word. So
Of this app meme.
What the,
Wow, that's a great
what is
meme.
that?
Honey, check out this meme I posted.
What is that?
I love. Hey, what do you think of this meme?
I'll hop in here while so that's going on.
How do we stop that? Did you
Kick
guys
them.
hear that?
This is gonna change the topic a little bit. If you want to go back, that's fine. I was listening to your conversation with Dr. Farber recently,
yeah,
and a question that I had on it was that some sort of disagreement is what I saw. Is he said that basically he doesn't think the Fed can raise rates at all at this point or much at all because it's just gonna take everything down. And what your thought on it was, oh, if I was the Fed chair, I'd be at 2 to 3% right now.
Yeah.
And like,
Yeah.
that's responsible. But what do you think they at this point? They're not at 2 to 3 points. Do you think they can really get in a hiking cycle at this point without negatively impacting equities?
Is this Joseph asking the question? I'm
Yeah,
trying
this is Joseph Yoham. Yeah. Call me Joe.
Great, and I'm glad you.
And real quick, I'll add one more thing. A historical
Yeah.
fact that I had found was that 90% of rate hikes have been done within 7% of all-time highs. And we're not within that range now. So it's kind of an outlier as far as.
Wait, so let me ask you, 7% of all-time highs of the equity markets?
Correct, yes. So rate hikes have occurred, 90% of all rate hikes have occurred when equity markets are within 7% of their all-time highs.
Okay, I will tell you this, Joseph, that's an interesting, and it's a way to track it. But if I go back to 79.80, right?
Right, okay.
You know, things change dramatically then. You know, my huge variable is the cost of money. So real yields versus nominal yields. Because when nominal yields are so vastly negative as they are now, people throw, let's go back, well, you're probably too young, I can tell by your voice. But if we go back to the dot-com years, I was on the CME board at that time, and I would hear from all the young tech people who I had a lot of respect for, but they would talk about burn rates, burning money. Well, I don't burn money. And if money is priced right or correctly, that's a better word, you ought not to burn money. I don't care what your model of development is. You ought not to burn. Money is too, I'm a middle-class kid, as I always say. Money is too valuable. I don't burn it. Now, do I utilize it in certain ways? Yeah, but I certainly don't throw around burn it. You can only burn money when nominal interest rates are so negative that the money has very little meaning. And that's why when you raise that point, that's why I would have been at 2 to 3%. Because I thought that was very apropos, and I still would have been at negative real yields, but things would have shifted dramatically. Again, are we going to get there? I don't know. We're taking a lot right now. We haven't done it yet, by the way, but we are on, and I caution I caution here what I'm going to say. We still, right now, we're doing a lot of deleveraging in the system, which, by the way, is a good thing because the system was too highly geared because money was too cheap. Money's going to, investors who have taken on unbelievable risk, whether it's SPACs, artwork, NFTs, we're going to go on and on and on and on. But you get my point. They were chasing things because everybody is merely chasing return. The final leg will be when housing prices start coming down. We'll know that we're really, even though we're not in the housing market, we don't have nearly the leverage we had in 05, 06, 07 that led to that. And it's disseminated in 5 different ways. But that's why I would have gone there long before. Or if you wanted to keep rates at 0 or at 1%, let's say, I would have embarked on, I would have left them there and been very explicit. I'm not moving rates, but watch me deleverage the Fed balance sheet, because that would have had a huge impact too. And what we learned in the second half and certainly the last quarter of 2018, in a world of, don't forget, this is still an experiment. This is still central banks experimenting. Make no mistake about it. So when they talk to you, and when CNBC comes on and sells it to you like, oh, you know, this is so matter of fact, it's nothing of the sort. And it's been my problem why I've been fighting with the Fed, man, let's see, probably since very openly. Well, I've been writing a blog for 12 years. I've been fighting with the very openly. And I was a big supporter of QE1. I understood that. And I had my arguments with Rick Santelli live on television about it. And I finally swayed him that QE1 was necessary. It was everything that came after that and where we were going with it that bothered me, and that they really had no, and then certainly after Bernanke goes to QE3, then they had no exit strategy. None, zero. And as Yellen famously said in 2016, before her chairmanship was up, that exiting QE and reducing the balance sheet would be like watching paint dry. Well, watching the paint dry in the last quarter of 2018 led the U.S. Treasury Secretary to call all the banks on Christmas Eve, the big banks, making sure what their capital positions were. So it was far from paint drying. Okay, can we agree on that?
Yeah.
But, and my problem was, and I used to, say it in very popular parlance with Santelli, I'd say, Rick, the first rule of being in a hole is stop digging. And the Fed just kept digging. And you know what? Everybody else in the world was forced into a position where they had to go the way of the Fed. Otherwise, their currencies would have appreciated dramatically. And other people have said that. So you got the ECB, the Bank of Japan is a world into its own, by the way. The way that we don't even know for the last, let's see, Abe became prime minister, Abe's 3 arrows, 2012, when he embarked upon this, and the yen went from 80 yen to, I think 100, let me, yes, okay, so we went from 80 yen or 77 yen all the way up to 125 yen. And so he accomplished what he wanted. The yen depreciated basically by about 50% on a slow rise, but nobody wanted their currency to appreciate. And had they broken away, meaning the ECB, the Bank of England, the Bank of Canada, had they broken away from what the Fed was doing, their currencies would have appreciated dramatically and they would have borne a lot of the brunt. Now, would they have been better off? We can have that discussion. And I don't know the simple answer, by the way. So,
I'll drag you back if I can to initially
Sure.
what I asked was that
Sure.
So Farber was pretty concerned that they can't raise rates at this point because it's gonna, tank equities and they don't want to do that. And I'm just curious, what do you agree with him on that, or do you think they're gonna be able to get in rate hikes while also, tapering QE and stopping QE all at the same time,
Okay, so and your question was that you're looking at how it's going to affect the equity market.
and second to that, I'm wondering is if it's enough to affect equities so that there's, the credit markets freeze again, it won't take too much more. Will that affect commodity prices? Will we see a liquidity event where like gold and grains get dragged down just temporarily with everything? Or is that is that off the table?
You might see it today, my friend. So, I have a rule of thumb, and And I'm out of the gold. I went home long last night. I got out early. I didn't see that move coming. And then I actually just got short. I made more money getting short the gold than I did long today. So, but because, I'm a believer, you don't buy gold, and Matt will tell you, it's a real rule of thumb. You can trade it on days like today or weeks like this week, but I'm not a believer that you buy gold during times of political upheavals like this. Because, and I have as I say, I have the scars on my back to prove it. I've traded enough, whether it was, the Iranian Revolution, Sadat's assassination, I can go on and on and on. But if you bought and thought it was just going up, it was not a good strategy, by the way, to buy it on the outbreaks of war and stuff. Now, this one, and I'm cautious when I say this, maybe a little different, because gold was going up well before. I mean, we had a very nice, probably in 2021, gold was down, I think 11% for the year. And I think we had caught it all the way back prior to this, right? So gold was already on the move a little bit. So last night, everybody jumped on because that's what the world's trained to do. And I'll also disabuse you of this, that how could gold have been down 11% in 2021 when everybody who comes on CNBC will tell you, or Bloomberg or Fox, that gold is a hedge against inflation? Well, we know that inflation exploded in 2021, and yet gold went the other way, and yet there was no real interest rate increases, right, from the main players. The ECB hasn't raised rates. The US hasn't raised rates. Japan has. So that flies in the face of it, okay? So to me, gold is a monetary phenomenon, and it's a hedge against central bank credibility.
And can we expand that to other like soft grains, commodity markets? Because I mean, those things have been on an absolute tear. And I'm
Well,
wondering,
they have been on a tear, but I've maintained that was going on because the Chinese were business. Right. I've been very consistent, and I really think that analysis has held up pretty well, because the bean rise has been relentless. And that was, and that was in the face of, I can't tell you how many people who I did podcast with when I would come on, certain places and talk, and I'd say, this is a Chinese phenomenon. I talked about it with Faber, but more importantly, I discussed it. I don't know whether you listened to that one, Michael Pettis.
I listen to everything that you do.
Yeah, he's great. And even people I know at the top of the profession love Michael Pettis. A friend of mine who runs a think tank in Washington. I mean, a lifelong friend. We went to grammar school, high school. We lived in a rooming house together in college. I mean, we have deep ties. And when he found out, he called me about something else a couple of weeks ago. And he said, you did a podcast with Pettis? He said, I got to listen to it. He said, he's my go-to. So Pettis has a lot of credibility in the world of high-level thinkers. And it was great. And I take his invitation to Beijing to lecture to his class seriously. So I'm going to, once things settle down, I'm going to try to figure that out, because that would be a really fun thing to me. Because first of all, Chinese students are very engaging. I've done enough lecturing at the University of Illinois, Northwestern, University of Chicago once or twice. And I always engage with the Chinese students. They ask a million questions. They are very inquisitive, where, I always comment to people who invite me for these, to their classes to lecture. Well, nobody here, they don't engage. When I was at the University of Chicago speaking to an MBA in the Booth School, Matt, John Brady?
Yeah, actually, I was kind of communicating with them a little bit last week.
Yeah, John. So John has his master's from Booth. So I said, so he didn't invite me to the class. I was actually invited by a guy who was a guest lecturer there, who I had met and we talked on. So he wanted some practical experience. And I said to John, I said, why don't you go burn that diploma? He said, what? I said, I went to that class. we talked about, I brought up Minsky, I brought up this. Nobody engages. He says, yeah. He says, because if you're talking to an MBA class, all they want is their degree. They're not there to stretch. I said, oh, okay, I wish you would have told me that ahead of time, because I told him I was going. That's why we had the conversation. But the pushback is important, and it's the only way you find out these things. You want to dig. So Joseph, your questions are absolutely, these are very pertinent and right. And if you're going to trade through this environment, you better damn well get your house in order, because things are going to come at you fast and furious, and you have to be prepared. I mean, anybody who listens to me, there's one thing that you know, I am prepared. Or as Matt and I will discuss, what do I bring to the table is context and nuance. And only through continual probing, and you can hear me with Faber, and I have great respect for Dr. Faber, even though others laugh at him, Dr. Doom, of course. Meanwhile, he did, and I can honestly say it, that when the low of the S&P was made in March of 2009, he was on CNBC talking about that he was stepping in and buying in dramatic. He thought it had run its way. So Dr. Doom, again, there's another person with such deep context that if you listen to him, yeah, it doesn't mean we're always right. It doesn't mean that. Nobody's saying that. What it means is that you can put these things in a really deep perspective, and then hopefully make the most profitable trades with the lowest amount of risk, because ultimately that's everything that I do, is I'm looking for investment opportunities with very low risk. That's always my end game as I search around the world. So I may have gone a little further astray, Joseph, but it's just the way I say things. And will the Fed go? I don't know. I don't know. If the economy starts turning down, they will have missed their opportunity. And that's, I think, what L-Arian, and L-Arian has been a Fed basher. He went from a Fed cheerleader probably 8 months ago to an avowed basher. He thinking that they dropped the ball on this and have missed it. And they may have missed an opportunity here, which will put us in a real difficult situation. So, I'm going to watch very carefully, but there are a lot of things, there are a lot of quote unquote balls up in the air right now. And you better respect them, because the ability to cause pain and suffering here is very real on a lot of fronts.
And just that last thing here for a little more clarification. So yeah, we are selling off below these very important levels, as Pax has indicated, and they are still planning to hike or tighten and all that, and that will cause. I'm still just wondering, like, do you see? I understand the narrative of China buying commodities, but do you see a point in the next couple months where the markets sell off so much that it kind of drags everything? The correlations go to 1, and just if people have to sell not only gold but all sorts of commodities just to meet that, and then all of a sudden the Fed comes in and prints a bunch more, and here we go again. So,
Joseph, I can't say there's too many.
Yeah.
There's too many variables, but they're good questions, because those are the variables you have to ask. Because I think a lot of this sell-off right now was and is due to the fear that the Fed is going to over tighten the economy. That's what I would call the David Rosenberg, Lacey Hunt school. And those are two very heavyweights who predictive, who ability to forecast things based on deep analysis that they've done for so many years. You have to respect. Now, I've not been in that camp, because I thought that the Fed would err, but you have to be attuned to it, especially as you talk about. There's a lot of risk that it hasn't even come off yet. And if it comes off, people are going to feel a lot poorer very quickly. Right now, it's been giddy because money has been so cheap. And don't minimize that, by the way. Don't minimize. Yesterday, I will tell you this, so you can write this down, because as I do reading, I try to share, but there was an important article I've read it before because it's in a book of essays that I have. Here, I'll put it out here right now. So I think it's a very important article if you can find it, and you should be able to find it. It's from June 1948. And believe me, I don't think that we're in the 70s, by the way. I think this period, as far as the Fed and where we're at, is much more mid to late 40s after World War II. But that's my opinion. So June 1948, it was in Nation's Business. You can get this, you can Google it, I think. Nation's Business was the periodical. And the article is, there is still time to stop inflation. Okay, it's by my favorite economist, for those who really know me. It's an easy to read article because he writes really well. Worth the read. Somebody can post it to the link. It's worth the read just because it puts you in the mindset of where we're at. It really answers your question, Joseph. It's about it's only, I can tell you right now, 41 to, in this book of essays. Oh, I'm live. It's 11 pages long. Very, very readable, especially for an economist of his stature. So it'll give you, again, some context. It's not that we haven't been here. We haven't been here. And the Fed has played these games with the Treasury. They didn't call it QE, but they were busy holding interest rates down. The inflation rate in 1946 was 18%. Interest rates were 2.5%, I believe, being held down because there was a shitload of war debt to pay, right? And the Treasury was worried that if rates, rocketed, that the cost of paying down that debt would explode and all types of.
Where were interest rates then?
You can go look at, I was looking at this yesterday, I think 2.5%.
Okay.
It could be wrong, but I was on it yesterday when I was expounding on this a little bit. And then in 1947, inflation is 8.5%, or basically 8%. Interest rates were being held down. That's because the Fed and the Treasury had reached an agreement, and the Fed was busy stamping down on long-term, on 10-year interest rates so that they wouldn't rise. And of course, if the Fed doesn't raise short-term rates, they're not going higher, because that's really the place where they first go to, if they want to, just like we're talking about, just like the question that Joseph asked. There's no getting around it. So what are they going to do? I don't know, but it's going to have a lot to do with how assets trade going forward. Because if they stick to what they were talking about, in Bullard and every other big mouth, when you put a microphone over, they can't help, even though I keep coming back to it. All these people get really full of themselves, but I have yet to see a no vote at a Fed meeting, right?
Earlier you had mentioned, and I talked about this yesterday on a live that I did with Cordelli, was gold, gold being a hedge against the central banks losing control of monetary policy and credibility.
Right.
So as the credibility of the Fed continues to erode, what real tools or what real credibility in the same thought, what credibility do they have left? The Powell pivot of 18, the double barrel shotgun approach of 20, which, by the way, today is the anniversary of that gap down, the 2-year anniversary of that gap down when we started the volatility, COVID volatility.
Yeah, because you're talking about entering into COVID.
Right. So,
not the Powell double pivot. That was
18. Well, yeah. All right. So the going back to the Powell pivot of 18,
yeah.
the double pivot. and then
Yep.
the double barrel shotgun approach of 20,
Yeah.
you know, in the COVID reaction. What credibility and what tools does the Fed have in the face of a world conflict like this, an ongoing world conflict? You know, we're already breaking because of inflation being anywhere between 7 to 12%. You know, the tightening and oh my gosh, what tools do they have, Ira? What can they
Okay.
possibly do?
All right, so last week, I read a piece, it was in the Bloomberg notes. I don't subscribe to Bloomberg Machine, but I do subscribe to their late in the day, so it's all stale stuff, but you get it. So there was a piece that Bloomberg, in which they were busy quoting Zoltan Pozsar. Now, again.
Meant to ask you about that, yes.
Okay, so Pozsar, he's one angry man. And he's angry because the Fed, and Pozsar is a power in the, he works he hangs his hat at Credit Suisse, but he's certainly a power in the short-term interest rate markets. As a thinker, and when he writes, people pay attention. So he is so pissed at the Fed because, you know, again, you know, going back to Joseph, I don't know where he would be if he ran the Fed, but he would have been tightening long ago. And I can say, because I know, Matt, I was in this room when I wrote that piece back in December prior to the Fed FOMC meeting, that at that meeting, I would have ended QE immediately.
Yep. Yes.
I was adamant. And now Alarian comes out and says the same thing, and others said, and when I broached that, I think in a podcast, I said, well, no, the dollar will rally. That's why you have to do it in a coordinated way with the G7 and the ECB and the Fed, and they all should have met together prior to the Fed meeting and said, look, we've agreed that way nobody's currency is going to appreciate, right? So we're going to remove that. But I don't know that I want to say that they intellectually understand, but they're not practitioners. You know, kind of, I always think that I'm watching the Big Bang Theory, and I'm watching the battle that goes on there every day between the practical physicists and the theoretical physicists. You know, and Sheldon Cooper wants to be a Nobel Prize winner for his theoretical, but the others are all practical and applying theory to get desired outcomes, and are they repeatable? And that's kind of the world that we, you know, there's a lot of theoreticians, but they don't look at the effects. You know, to say that there was no inflation was just friggin' wrong. There's been asset price inflation, but that they determined to be a good thing, because in Bernanke's portfolio balance channel, which was the theoretical underpinnings of quantitative easing, rising asset prices without rising living costs is a very good thing, because that gets the animal spirits flowing, right from Keynes. Although Keynes probably would have been abhorred at the concept of QE and the way it was done. That's my take. Doesn't mean it's right. These are very, very, very important things. So now they've unleashed this, and don't forget, even through the summer, I would say through the summer when they were still preaching transitory, and the Fed was still adding 120 billion a month in reserves. What was the rationale? Because we always get a rationale from the Fed. They're always going to give you a rationale in their effort to be transparent. But I no longer believe the Fed is transparent. They release this stuff like with forward guidance in an effort to be able to control the markets that they seek to control. End of story. It's not to be transparent. They're trying to control them. They hate that markets move in unpredicted ways.
They did 90 billion in a week. Blew me away. It was in October.
Correct. You're
That
right.
was insane.
Right. Because they were involved in trying to something was going on. Yeah, I'd have to go back and look. But if we go back to the summer, I mean, there they are doing it. And what was the rationale? Powell would stand up there and go, well, the unemployment situation all better. There's still, and him and Yellen were very vocal in stating that real unemployment was still closer to 10%. They must have said it 3 or 4 times. And that gave them justification for keeping the throttles fully open. And because, and I will tell you this, Powell's phrase, those who lost jobs through no fault of their own, and I called him the Minister of Social Justice. That's not what we want from the Fed. I'm a hard money person and I'm a responsible money person, not that. So then he shifts gears, right? All of a sudden, wait, what happened to the real level of unemployment? He all goes to the wayside because he got spanked by the White House, because the White House, of course, is worried, as every politician in the world is, about headline inflation. And that was absolutely the pivot. We talked about it ad nauseum after the November elections, the recent November elections, where the Democrats got beat up pretty good all over the country. And the pollsters said that headline inflation was killing them. So of course, what's the first thing that Biden does? Releases oil from the Strategic Petroleum Reserve in an effort to bring down oil prices. That lasted, as most people who looked at this could predict, 3 days. And all it did was result in windfall profits for the large refiners, right? Yeah, the answer is right. That's exactly what happened. Yeah. And then we went. So again, politicians always want to look like they're doing something. Because if things are awry and you're not doing something well, but sometimes you have to sit and let things take the course. Now, with that said, of course, I believe in a social safety net. I think it's very important. I'm a libertarian who believes in a social safety net. But I think that I would say the same about Hayek. He was a severe libertarian. I mean, I'm nothing in my thought compared to a man like that. But I believe he was very adamant about a social safety net. And these are things that have to take place. But the Fed doesn't get a free pass from me here. I think it's an abomination that Jerome Powell is being reappointed. But that's the Wall Street crowd. And with Jerome Powell and his pivot in January of 2019, you love this guy. You love this guy. And he's made their life easy. No, not so easy. But I think, and going back to the initial parts of the question, is the first move down here, the first 8% down in the equity markets, 9%, I think was due to the markets really waking up to the fact that the Fed was going to be a little bit more aggressive than people had originally planned. And we saw that the market had already taken interest rates, right? The Fed has not moved one iota yet. But yet, even through yesterday, I could look at the these 22 euro dollars, and yesterday they had an effective yield of 2%. So in the next 10 months, the Fed was projected to do 7 rate increases. The Goldman Sachs rule, that would have taken us to about a Fed funds of about 192. So the market was starting to adjust. It had to reprice some of the asset base because the markets were continuing to tried to push the Fed to be far more aggressive. We'll see. And these are the things that we're going to be saddled with and trying to understand. And if the Fed backs off and the market doesn't deem them, all depends, of course, what happens out of the Ukraine. What is the collateral damage? What is the fallout? Does Russia pull back and say, look, understand that we're serious about this. And now when we negotiate, understand that we're going to negotiate, that we're negotiating and we're willing to go to war. Are you? If not, okay, then the conversation has just changed. And how those come out and how it's these are the things we're going to be dealing with. But I think the market will have if the Fed stays on the on what James Bullard and a few others have talked about how aggressive they have to be. 50 basis points in March, and then we're going, maybe 50 at the, of course, they were getting to 1% by July for sure. The market still has that baked in, by the way. I'm looking at the July Fed funds contract. That's at 92 basis points today, and that's up on the day 12 basis points, meaning rates are down 12, but the futures contract is up 12 ticks. So a lot of things in play here. And anybody who tells you that they have the answer, run away from this as you can. You have to do the work, and you're going to have to analyze this and find out what your comfort zone is. All right. Now I'm on to Sev's question. Do you think the U.S. would agree to a deal with Iran now? Yeah, we already saw that. So Sev, I think that's right. What's the deal? Don't know. But we're going to have to, again, a lot of moving parts here. And will they go for the quick fix there? I think it all depends how long Putin pushes this. I was one who didn't, the foreign policy experts in the United States, policymakers, they were hoping Putin goes in and gets dragged into a quagmire. You can hear it. You can hear it in what they write, and you can hear it in what they say on talk shows. And I hate watching the news, but when war comes, I'm a voyeur, and I watch because sometimes those pictures are more important than any words I'm going to see. So I turned it on for about 15 minutes last night. And it was interesting on Fox. I went to Fox because first I turned on CNN because they have a tendency to have better boots on the ground in places, but I couldn't listen to that shit. And then I couldn't even listen to Fox because the national security people were arguing with an ex-lieutenant colonel, a retired lieutenant, who said, this could, and I had to listen to him closely because I agreed with him wholeheartedly. He said, all this action is unnecessary. This could have been resolved months ago had we bothered to listen rather than just bang our chests and go, no, no, no. And had we listened to what Putin wanted and not kept pushing. So I thought that was interesting. So it's interesting the way certain people size up here. I don't know. The longer this goes on, I think the question you asked, of course, becomes more probable because they're going to want to replace that Russian oil, even though, oil is totally fungible. End of story. So the Russian oil will go somewhere. And
Yeah, Ira, good point to that. We'll see what Biden says today at noon when he comes out, because obviously aside from Nord Stream 2, we'll see if there's strict sanctions on cutting off Russian oil exports to certain regions of the world. Obviously, you said it's important. So that's almost as important as what they're going to do with the JCPOA in the Iranian barrels.
yes.
You have to think that this gives Iran some critical leverage when coming to the table and negotiating this deal, because I think the window for this deal to be negotiated is sometime next week when after there's a hard deadline for it to expire. Obviously, it's it's a moving goalpost. Maybe they could push it back, but I really think that this emboldens Iran because the world is going to be potentially starved for more oil. They're talking about getting 2 million barrels. Now, the thing we have to realize is, oil comes second in this JCPOA deal. Iran wants sanctions never to be put back on. And I don't think the U.S. is ready to commit to that, given the amount of uranium that they have been enriching since the deal was, basically since 2015.
Correct.
So, U.S. production can only, they can ramp it up right now, but like we talked about before, U.S. shale, they need the capital expenditure, and they're keeping production relatively flat to increasing it. There's just a lot of issue and regulation going on around US production and how quickly they can ramp up.
Yeah, there was a lot of that discussion. And again, it's fungible. So will the Chinese take all the Russian oil? Of course, it's all important about the grades of oil that you need to refine, because
Yeah.
not all refineries are equal, and we know that there's, all types of grades of oil, the Venezuelan oil, which we can start talking about that too, although that their infrastructure has been so badly depleted. But that's such heavy crude, that's why the Citgo refineries were owned by the Venezuelan oil company, because they were there to refine Venezuelan oil. Now that oil is much cheaper because it needs a lot of more tender care. It was the same with the oil out of the tar sands up in Canada. Canada gets a big boost here, although you wouldn't know it from the way the currency is trading. Canadian oil can, it can be Pacific or it can be Atlantic based as far as moving around the world. But again, so the Chinese will take all the Russian oil. The Japanese will still take Russian oil. The Koreans, you can't ask them to shut down their economies, right? That's a big price to pay when you're not willing to put one American soldier on the ground. It's really a pathetic statement about this group of foreign policy advisors, because they really wind up negotiating against themselves. As soon as Biden back in January made the comment, no Americans will be in Ukraine, no American soldiers, don't worry about that. Well, now you're negotiating against yourself, because Putin goes, huh? So if you're not, how far are you willing to go? And I've already established a fortress balance sheet, which he has. And I can endure some pain, far more pain than you can. Go ahead, take a 20% downturn in the equity markets. You want to see Biden's poll numbers now? Huh, you know what? They will go limping into it would be, and they're worried, and you know that they're worried because that's why they're dealing with headline inflation. So that there's a lot of concerns here, and don't think that doesn't factor into Putin's equation, by the way, that the more miserable he can make Biden, because Biden has political concerns, the more leverage he gets. So it's been
when you look at the Keystone Pipeline being canceled day one or week one of the Biden administration, coming out and pounding your chest and say, oh, I canceled Keystone, and then obviously then further on canceling leases on drilling on federal land and making it a lot harder to build pipelines and all the current infrastructure already in place for expanding pipelines, like what's going on with Energy Transfer Partners with our domestic crude pipelines to getting crude to where it needs to go. Obviously, besides what we saw, what's going on now with Russia, which takes front and center. You look at this, and OPEC looks at this and says, why are we going to pump more oil to potentially appease the West when all you want to do is eventually, what in his words, basically, I'm paraphrasing here, is stamp out hydrocarbons.
Yeah, 100%.
So,
it's what boggles my mind when they talk, meaning the people, the policymakers, they think everybody's stupid and that nobody can see through this. And that, when Biden gets down on knees and begs, Russia and Iran and others to pump more oil, huh? And people start adjusting. It's what Putin's been doing here. Putin has been on the move, making adjustments as he reads the tea leaves from these people. They're so used to thinking that they dictate to the world. You don't dictate to the world. And it's one of the things I think that Putin is trying to show them. And it's just like the Chinese said, a few months ago. Well, yeah, you want a world, a rules-based order, but whose rules? The Chinese asked that question. And it's a good question. Whose rules? And if we can come and find common ground where we agree on rules about behavior in order to make less misery in the world, great. But whose rules? And it's a question that has plagued the world since the end of World War II. Whose rules? And it was easy. Even George Kennan, the father of Russian, of Soviet containment, he knew that very well. And my favorite political scientist, Graham Allison, says that if you didn't have the Soviet boogeyman and containment, the concept of liberal democracy and its spread around the world would be far less, by the way. And it's a really important point that Graham Allison makes. That so when we parade this around, and I don't know whether anybody watched it. I didn't watch it, but McCarthy, of course, sends it to me. Condi Rice was on with Fareed Zakari on Sunday morning. Anybody see that? Okay, it's worth going to get the clip of it. Of course you saw it, Alexandra. But it was a little disconcerting because when she raised first of all, she raised a couple of points that really need to be picked up on. And she said, and I like Condi Rice, I have a lot of respect for her, is that she said, well, you know, eastward movement of NATO after the fall of the Berlin Wall, that really, in that period, it's not anything we focused upon. We were just worried about the unification of Germany, right? And that kind of like, okay, well, just because you weren't concerned with it didn't mean that the Gorbachev, you know, and the post-Russian group weren't concerned about it. And then she goes and she talks about, and this is important because she talks about William Burns. Now, William Burns, who is right now, in the Biden White House, the head of the CIA. Well, in 2008, William Burns happened to be the US ambassador to Ukraine. And William Burns sent a telegram back to the US advising, after what happened in 2007, and advising against NATO expansion to the east. As a matter of fact, you can go look it up, Google it. He sends the telegram, "Niet" means "niet," and said it's just not a good thing to do. Why are you? And George Kennan, you can go find his article in 1997 in Foreign Affairs before he died. Don't poke the bear. Not a good thing. Not a good thing. So I want to hear right now, today, yesterday, from William Burns, who wrote this telegram. But of course, he's now a soldier in an administration, and he's going to be a good soldier, and I understand that. But he had some issues about this long, you know, when I say long ago, 14 years ago. There are things that need to be discussed in order for us to get to a better place, rather than just poking the bear, so to speak. So again, all of these things are critical, hypercritical, I might add, to how this all plays out and resolves itself. And you know, we're mercenaries, of course, so we're mercenaries for money, and we trade for a living, and I analyze the world and try to give advice to people, and you know, that's my job as I see the world. So there's a lot to be here, a lot to see, but there's a lot to be very cautious about. I wouldn't just be jumping into waters, but get a handle on it. But there are so many things that are, as I say, moving parts here. There are massive amounts of moving parts. And the questions that people are raising in this room this morning, where does Xi go? What does China want? Does China want to further disrupt the global system and bring it to its knees? Ken McCarthy says no, and I think that that's right. China still has a lot more work to do here. Will they irritate Taiwan more? Yeah, but it's nothing that they didn't know before, right? Mao in the 1970s and 60s called the United States a paper tiger. I don't know that that was true then, but I would say that it's true now, because we're not looking for engagements. And that's another thing that irritated about Biden. I respected the fact that he wanted to rush and get us out of Afghanistan, the shithole that it was. And I knew why we were there, but Biden wanted to take us out in 2011 when he was vice president, made 3 trips to Afghanistan and was belittled by this same foreign policy team that he brought in, which was the Obama foreign policy team, for being naive and, it's not the way to go. So I give him credit for that. But why did you get so brazen in your rhetoric so soon after that? It's really one of those questions that I have to keep asking myself. Why did you keep ramping up the rhetoric? And I've had people who are really very knowledgeable about the inner workings of the State Department and the National Security Group say, well, this is the way you have to go, because if you're not going to be brazen in your rhetoric, you're not going to get Putin's attention and he's not going to believe you. Okay, I don't know. I've never negotiated with Vladimir Putin. So I don't know. Maybe that's the way you do have to do it. But I'm a Teddy Roosevelt guy. I speak softly and carry a big stick. Well, when it comes to using it, you better well use it. And I'll finish with this, because we're getting a little in Putin's speech yesterday before the actual invasion took place. 3 times he used the word red line. That this is a red line for Moscow. This is a red line for Russia. This is, the way that Ukraine is, this is a red line. Sticking it into the eye, the needle into the eye of this foreign policy team who fell down so badly in 2014 in Syria, which allowed Russia to re-enter the Mideast. So Putin was turning that needle, or turning it ever more time. He used the word red line, red line, red line. So he's very aware. The question is, what is his real objective here? And has he expanded his objectives because of your malfeasance?
I appreciate all your time today. Go ahead, Aaron.
And where the Fed goes, we'll be on watch, right? I'm looking at the interest rate markets now. They're still holding up pretty well. 5 years, well, 15 ticks off the highs. I'm going to look at the futures. The 2-year is 5-year. And I'll tell you what, though. If the Fed, here's, Maddie, this is for you. Where am I going here? Let's see how well you know me. It's directed in the interest rate world. What am I going to tell you here?
About yield curve control?
You're pretty good. So I'm not going to call it control.
Yeah, manipulation. I was thinking that. Sorry.
Listen, this is like, if we're not dealing in the Socratic method, hold on. I'm actually having a nice lunch today with Bookfire.
I was talking about him yesterday too with Anthony.
I'd love to be a fly on the wall.
No. Really, you wouldn't. We every year, because he comes down there to Scottsdale, he has a timeshare about a mile away from me. So we're gonna. So we have a breakfast or lunch depending who's around. Okay. Hold on 1 second. I have to see this. Okay. So, but if the Fed starts to walk this back, the yield curves will steepen. Because right now the flattening is taking place because they've pushed, the short to the belly, meaning 5 years and 2 years, in anticipation. So that will back off a little bit. And then I think the long run will get a little bit nervous, especially if the Fed truly gives up QE. They don't have to begin tightening. But if they're not buying, I think that there are people who will go, well, if there's a stagflation environment, I certainly don't want to be long bonds. In all deference to a couple of my favorites, I'd be a little reticent to start buying bonds. So I would look for that to happen. I'm not telling you today, it's just something to watch. Because we have pretty drastic shortening or flattening over the last 6 months, right? And I think we've really been well on top of that, by the way. So if I'll take one more question, otherwise we'll wrap it up. I got stuff to do.
I'm gonna jump in here real quick.
Chip?
It's about so Russia, you mentioned Russian energy firms you're into, and one of them was it Montenegro?
Yeah.
Subsidiary of Gazprom. Is
Right.
there a way for, other than buying it on the London exchange and the Moscow exchange, is there any way to get exposure to it?
Yeah, you can buy it. I mean, I'm telling you how, I think it traded 1,100 shares yesterday. It really did. Let's see. Oh, it's getting beat up pretty good this morning. It's down.
I only saw it on the OTC. So is there a?
No, it's only OTC. I
Okay.
do it. So, but you just have to be patient. So if you buy to me, it's like buying a bond. It's like buying a shit corporate bond. That's the way I view it, because it pays a big dividend. Yeah. Can it go to zero? Yeah, it can go to zero. Can they? My greatest fear is that they prevent the dollars being transferred to pay the dividend. Okay, then I'm stuck and I'm getting no dividend. Okay, I know the risk, but it's paying me 8, not probably today 10% if I buy some today, if I can get it bought today. So I'm buying. Okay, for 10%, yeah, I'm willing to take the risk. That's all it is. Is I'm acting. To me, it's absolutely acting as a bond, nothing more, nothing less. And if I think that Russia is going to be totally knocked out of the global system, well, if that's the move that you make, we are going to have far greater problems going forward. Because that would be an enormous step, especially because they're so critical, as the Ambrose Evans Pritchard piece lays out, in so many areas. Titanium, the world's biggest shipper. Palladium, the world's biggest exporter. Second biggest platinum exporter. We know what goes on in Ukraine with the grain markets. I mean, that's a great bit of history. It was always called the breadbasket of Europe, if not the world. The southern steppes is as good an area. We got any Midwestern farmers on today? As the farmland of Iowa, Illinois, Indiana. I mean, that's some of the richest farmland in the world. It's why it's so productive. So that's the same thing with the southern steppes in Ukraine. This is a lot of moving parts, and we can do as many of these as you want going forward. If I'm not busy, because you are going to see massive moving parts.
Yeah.
Watch the S&Ps close up 3% today, right? I don't know that, but I'm just watching what's going on in front of me.
Well, both the S&P and NASDAQ are both at really important levels. 4187, 13,400. We're back. The SPOOs are back at June's expiration price.
Yeah. Interesting that the dollar is, people are rushing the dollar, so we got all dollars. Yesterday the Aussie and Kiwi had good. Now they're getting killed. Even the yen is down, so there's no haven status there. So there's a lot of movement into dollars, even the Swiss, rightfully so, by the way, because the sanctions may weigh very heavily on the Swiss. I'm getting killed in my UBS, but I'll do that. Because, there's just historical patterns. Yes.
Ira,
Yes.
quickly, Did you, did Dysart hook up with you?
No, but I've heard rumors that he's hunting around for some people who know the wheat market pretty well. So, and I'm really not that one, so he doesn't need, but him and I can talk about anything else because I think a lot of what was covered was right. And I go back to the Faber piece, really, we're right there. And what would happen? And I'll tell you what, they better be careful with Putin, because if Putin says, I'll only take gold, you know, now Faber tells me it won't happen. But I still believe that if Putin wants out, if they're going to make his life miserable, he's proven that he knows how to make everybody else's life miserable. And if you want to see a disruption to the international monetary system, watch him say, I'll only take precious metals in payment for oil.
Oh, shit. I meant to bring that up too. Oh my gosh. That leads to a whole different discussion. A lot of
Yeah, which we could have next week, but Faber
Yes.
disagreed. He says that won't happen. And I talked to a few other people and they say it's too difficult. Yeah, I'm not there. And you know, as I explained to my son-in-law Josh all the time, I said, my strength is that I think about things I'm not an iconoclast that thinks I don't try to think out of the box just to think out of the box.
Right.
I'm trying to look at what maneuvers would I make, and my contextual basis of economic history says, well, this might not be such a bad thing. Very disruptive. And if you've watched the movement between gold and Bitcoin lately,
Yeah, absolutely. So
maybe
you know,
maybe I stumbled onto something.
I
Oh,
think
here comes the NASDAQ higher.
NASDAQ, S&P's above it. I flattened up my shorts. Brad, I flattened up my shorts above it. Well, at 89.
Well,
You know, all right, Ira, that's I actually wanted to go there, but Joey had such good questions and good points. Was somebody brought it up earlier too. I think it was either Penn or Emery, but the ramifications of us removing Russia from the SWIFT system, I think has deeper ramifications, at least in my mind, for dollar supremacy as the world's currency, and might possibly lead to Russia and China and then also parts of Europe to move further into a gold-backed or asset-backed digital currency. Yeah, I don't know. Just a thought, crazy thought, maybe, but a thought nonetheless.
Yeah, it's got to be in your mindset, because see, that's the problem when you keep fostering sanctions, because you view it as the most painful with less blood loss, which is noble in its endeavor, certainly. But people learn to work around them. So your point is dead on, because if there's one thing we're going to be certain is that Putin is going to continue to show us new wrinkles.
Yeah.
And he's got a partner now, right?
And a big partner too.
He's got a partner. He has a partner that you better damn well pay attention to.
Back to that Chinese curse. May you live in interesting times.
Oh yeah, thanks. And thanks for that.
Yeah, no kidding. Sorry.
Yeah, no. It's right. Listen, the wisdom of the ages is there for a reason, you know.
That's a good point.
There's a reason why we turn to it. There is wisdom. Yeah, but thanks. I hope I was able to, I don't try to scare people. I'm just trying to lay out things as I see them, and as traders, because that's all we're concerned about here with, by the way. You don't need my political views, and hopefully I haven't given you a political view, because that's the worst of all things. But that I make you scared enough, aware enough that you understand every risk that you're taking on, because you're going to see great movements and you're going to go, oh, I got to get part of that. Sometimes, as we say with Cool Hand Luke, nothing is a pretty good hand, or proceed with caution. But if you can draw things together, I would be drawing things together. And one of the things I'm seeing today now, movement in the European sovereign markets, right? The Bund was acting as a safe haven. But I'm going to tell you what, not now, because the German, the French bond futures up more than the German, and the Italians, you know, racing them all after being really put upon. So I don't know what the ECB is planning. I know that they were going to issue something, whatever that something is. So we will see. Again, so much going on here. It's scary. It's scary.
It is.
All right. I'm tail lights.
Later on, so we can put another, there's so much to talk about. We're just laying the surface. So we'll schedule time next week whenever, whatever's.
Okay. Yeah. Yep. And you know what? And it was an interesting thing that John Desart said about, he felt that Nordstrom 2 just not even an issue. Doesn't matter, you know, for the shipment. That was for geopolitical purposes.
Olaf Schultz has said that that Germany will not agree to kick Russia out of SWIFT.
It's stupid. He's right.
It is.
He's right. He's right. So interesting that he's now coming out. Yeah, thanks. And all the best, and really think before you shoot.
Yes, no doubt. Thank you, Ira.
All right.
Well, again, everybody, that was a great conversation with Ira. Sorry for, I wanted to thank Corinne for